Cloud. And it is all yours, my friend. And you have a co-hosting ability as well.
Thank you, Chris, very much. Hello, everybody. Good morning. Happy Election Day, November 8th. If you haven't voted, make sure you get out and do so today. That's enough of the public service announcement. I am, as most of you know, I'm David Allen, and I'm excited to be here. I'm excited to join the platform. I'm excited to be with a company that wants to do things the right way. And my job is to help get you guys coached up so you can go out and write some annuities and increase your book of business and go protect more families, either directly or through the upsell of you're already meeting with somebody. How can you turn around and actually be a little better for them? So let me share my screen and we are going to get into this. Give me a half a second here. This is fantastic. All right, so you guys should be all able to see my screen at this point. I am, and you'll find this out, I'm not a big color-coded guy. I don't do a whole lot with graphics. To me, money is money. Last time I checked, the dollar bill's green, but the way we talk about it's got to be very black and white, and it's got to be very relative, okay? So what's important is we need to understand what the rules of the game are. So let's talk about what that first rule is, which is very simple. Your life license legally allows you to present and sell annuities. We are not required to get a securities license to sell fixed index annuities. Every state in the union says your life license allows you to do this. Why is that important? It's important because your customers, your clients, they're going to ask you if you got a license to do this, and you want to be able to positively affirm and say yes. One of the things you're going to learn over the next few weeks with me is how to take every question that you have and convert it so that the only possible action you're going to get from your client is a head nod and the word yes. And the better you get at getting yes answers, even on things that you haven't really thought about yet, your clients start to self-close themselves and they start to make your job easier to do what you're doing. The next rule is very simple. That life license gives you permission to be bold, no fear. So what does that look like? What it means is if you're in tune with your why, if you understand what your role is, which is to protect other families so that you can take care of your own, fear is simply an excuse, and we want that eliminated. So your life license gives you permission to be bold. I'm giving you permission to be bold. Brian and Roger and that whole ownership group, they give you permission to be bold. Because the reality is, if we don't go out and do this, somebody else will. So Jason Craig reached out to me last week and asked me if I can help him with a few cases. And we met with one yesterday and things are moving forward and it's exciting to do what we're doing, right? But Jason had two options. He can go out and fight it out on his own, or he can make a phone call and say, I want to learn to be better. These trainings, what my platform, what my team is designed to do is help you to get better so you can reduce the fear. And if you reduce the fear, then you also have my permission to go make $100,000 a year more, $150,000 a year more for your family. If you prefer not to make extra cash, that's okay. It's not my choice. It's ultimately yours. But I can't begin to tell you over the years how many agents have looked at me and just simply said, I can't believe I didn't ask if they've got money saved that needs to be protected better than what's going on in the world right now. And I've had agents that if I mention names, some of you would know those names, and they've literally looked at me and said they've walked away from millions and millions and millions of dollars of potentially annuity sales that could have been a couple $100,000 in cash flow for the agent, but now they're selling because they understand the importance. And it really comes down to one simple question. If you have a choice between yourself or some other agent to protect your client, Who do you want that to be? Do you want it to be you, Tracy, or do you want it to be the guy at the securities firm? You obviously want it to be yourself. Why would you give up that opportunity? So you have to learn about no fear. And part of that means what I use as an acronym, ABE. Always be edifying the competition. A lot of people look at that and they think it's a little strange. Why would you want to make your competition feel good? Why would I want to make the securities advisor feel good? Well, ultimately, they've tried to do a good job, and I'll explain why I say tried versus did in a moment. But if I'm working with Nikki and Nikki's the potential client, and she acknowledges to me that she's been saving money in a 401k from an old job, I might ask Nikki, how much have you saved? Well, I've got $150,000 in that account. That's great. Where is it? She might tell me it's at, ABC company. So Nikki, your rep, your advisor at that company has done a great job assisting you in growing and saving your money. I want her to feel good about what she's done. But the next thing I want to do is be relative about what's going on in the world today. Okay. So this is probably one of the most important things I can give you today. Know what you can speak to versus not. Can you advise on buying or selling or trading stocks, bonds, or mutual funds or T-bills? Not one bit. Our license does not give us permission to do that. Our license does give us permission to talk about anything that we can find in mainstream media. So what's going on in mainstream media right now that would mean something? Take a look at those headlines. Back in June, JP Morgan in Bloomberg, which is a world-renowned newspaper, JP Morgan is bracing itself for economic hurricane. Then in August, in Business Insider on Twitter, JP Morgan's CEO tells wealthy clients that there's a chance the US is heading into something worse than a recession. Well, there's only one thing worse than a recession. That's a depression. That happened in 1929. And for those of you that might want to look it up, it took 25 years for the market to rebound from the crash of 29. I don't know what's going to happen now, but Nikki, you've got money saved. If it took 20 years for that to come back, that's probably not a good thing. Would you agree with that? And you notice the question is designed for that yes answer. Let's take a look at one more that literally just came out Friday night after the market closed. Bankers Life Insurance. On November 1st, the commissioner of the Department of Insurance for the state of North Carolina filed a petition to liquidate Bankers Life Insurance. Now, this isn't their securities wing. This is their life insurance division. Everything that's highlighted, if you go to their website, these are all solid links that you can read all about this. But what you're going to find out is this problem started back in 2019 and it's never been mainstream. Some of the ownership moved over $450 million away from Bankers Life to other entities improperly and got caught. They were given an opportunity to fix it, but they didn't. So North Carolina Department of Insurance said, we're done. We want to liquidate this and protect the clients with what's left. Now, here's part of the massive problem for Bankers Life clients right now. There's a purported moratorium on any distributions from Bankers Life to any clients until the liquidating commissioner can figure out how much money's there and who's supposed to get how much. This is the equivalent of someone like Wells Fargo deciding they have to shut their doors. This is the equivalent of when Merrill Lynch was told, you're going to allow yourself to be acquired or your doors will be shut permanently. And then over the weekend, they became owned by Bank of America. This is on the internet. This is massive news. How can you use this to get your client interested in what we do and how we can protect them? This is where simple Q&As come into place. So if Michael was my client, Michael, Banker's Life obviously is unfortunate. I'm glad you're not with them, and you don't need to answer anything, Michael. We're just going to go through some explanations here. But it would make sense to make sure that what you have saved is properly protected, so maybe you don't have to worry about this if something were to happen to the company you're with now. Wouldn't you agree? Doesn't this make sense? And the design of the question, for those of you that were looking at Michael Hansen, the instinct is, yeah, subconsciously, this totally makes sense. I should look at this. Well, Michael, I've got good news for you because we specialize in these things. So here's where we need to talk about, in a very 2 or 3 minute segment with your client, the possibilities of, because what do we not know? We don't know if we actually can do anything better. Our job is determined if we can, and then show them. But if we can't, be honest about it. And what I do is I actually let my clients know that exact thing up front. So Tracy, I've only got a couple minutes left. I got to get off onto my next appointments, but you talked about that old 401k you have. Obviously, Banker's Life was an issue for some people. We want to make sure it's not an issue for you. And I know you agree with that because you already told me you did. But I want to talk real quick about how we might be able to help that. And your account over at ABC Company, it is a retirement account. And anything we do for you would also be structured the same way. So the good news is if we can find you a better answer and a better option, we're going to be able to move that money completely tax-free. So if we can find that option and you like what we show you, and we can keep it tax-free, it sort of makes sense to figure out if we can do that, correct? And the only answer you're going to get from Tracy or whoever's sitting in Tracy's shoes is yes. Once again, I'm looking to word at each step that yes response, because I want Tracy to close himself. The next thing I wanted to is talk about the type of products we have. Tracy, you're currently with ABC Company. You've got a brokerage account. So you got stocks, bonds, and mutual funds, probably mostly mutual funds. Is that correct? He's going to say yes, because 98% of all mutual funds is what's used, or 98% of all retirement accounts, such as 401ks, utilize mutual funds. We're going to use something called a fixed index annuity, or FIA for short. What's really great about it is what we're going to show you from the protective standpoint, because in both cases, Tracy, you're going to make money. But the differences come when you start looking at the problem areas, like what's your risk of loss? Where you're at now, you know, if the market goes up, you make money, but when the market goes down, you're assuming 100% risk of loss, right? And they're going to acknowledge. Our fixed index annuity platform, if we can find one that's a good fit for you, they come with no risk of loss by contract, backed by the state of, and whatever state Tracy's in, I'm going to mention it. And I'm also going to mention it's backed by the federal government in terms of how it's supposed to be put together. So Tracy, if I can find something that remains tax-free on the transfer, but also can completely eliminate the possibility of you losing money with the markets, just makes it that much more that we should look at, right? And you're going to get another yes answer. Now, if you want to be real creative, you can ask Tracy to put a check mark next to 0% risk of loss and get what I'm going to call client participation. Because now they're involved even more so, and actually physically, with, I want to learn more. What's the next thing we talk about? We talk about fees. Now, here's where we need to be presumptive also. Tracy, when I review your statement, which I'm legally required to do for this comparison, we're going to identify what you're actually paying in fees. And on average, we see that is approximately 1.5 to 4%. But these fixed index annuities, some of these products actually have no fees on the core account. So again, if we can move it tax-free, if we can eliminate your risk of loss, and we can reduce your fees, I'm guessing you're probably getting kind of inquisitive right now, wondering if this really is going to be a solid fit for you, right? And again, I'm asking another question that's designed for that yes answer. When he says yes, I might ask for another check mark. By this time, he's giving you 2 check marks. Pavlovian concept says he knows what's coming next. So now we talk about things like bonuses. And you can talk very quickly about how bonuses work in the world today. For example, somebody gets drafted into Major League Baseball, they sign a contract, they usually get some upfront money as a signing bonus. It used to be in the banking industry that your signing bonus was a toaster that the banker would give you when you opened up an account. Nowadays, what they do is they give you cash in your core account, or your benefit bonus, otherwise known as your income rider, can be bonus material as well. Where they're at now with their securities firm, those are not available. The industry does not do that. But depending on what the client wants, we can actually structure one or the other or both if possible. So Tracy, I know you're starting to get excited about this, but if we can give you some free money in the process, would that help to offset some of the losses you've probably seen this year? There's no option other than to nod your head or say yes there, right? So now what do? We talk about what happens with your money, both currently and when the Lord calls you home. Your current 401k, when you start to draw from it, I'm sure you're aware that you're going to run out of money because it's not properly structured for your lifetime. Is that correct? That's probably going to be the only time that they're going to say, no, I didn't know that happens. And that's the only place I want a no answer, because I want them to literally be shocked that they could run out of money. Here's where you need to have a story. My story is my father-in-law decided to retire, but 12 years into retirement, he announced over a holiday meal he had to go back to work in his 80s because his retirement wasn't footing the bill anymore. Tracy, can you imagine if you were able to retire at 65, having to look at your wife and your kids and your grandkids at 82 and say, I've got to go back to work because I can't afford to stay home anymore? This is what's going to happen if your money runs out. With a fixed index annuity, because of the no loss, we can guarantee if you need an income stream, your money's never going to run out. So we look for products that are going to give you that option, because your lifetime income is not there where you are now. But if you need it, which most people say, yeah, I'd like to have a lifetime income, I don't want to ever have to worry about running out of money, we can structure that for you. So if we can structure to make sure you never have to go back to work unless you actually want to work, kind of sounds pretty good, right? You're going to get another yes answer, but what do you also have? You got a whole bunch of check marks here, which is what you want. The last piece of this puzzle is right there. Who's responsible for your account? In your current 401k, you're responsible, but you're at the mercy of your rep, your financial advisor at that securities firm. Because when the market's crashing, you have to call to sell to be able to liquidate, to minimize your losses and to cut them. But if you can't get somebody on the phone, or you're number 12,000 in line to put in a sell order, you're out, you're losing. And until you get the sell order in, whatever the market does, the market does. You have no control of the upside or downside. By comparison, the client still is responsible for their account, but you're completely protected with the no risk guarantee. So Tracy, if you know that your two options for your account are to either make money or not lose, I consider that a win versus a 401k. Wouldn't you agree? Another question designed to give you a yes answer. Now, it may take you in the beginning 5 or 10 minutes to go through this. And as we're building the back office up, some of this material is all going to be there for everybody to grab. So we're going to make it easy for everybody. Okay. But once you get it, the next thing that happens is you get to start talking about this, where you might turn over your financial inventory collection worksheet, and on the back, which is blank, you might draw a T and write this out so that you've got somewhere for them to actually put that check mark. You might not do that at all. You just might talk about it openly like I'm doing right now. You're going to get there. As you get there, your confidence builds, your fear goes down even more, and we're able to continue to just assist more and more people. Okay. So once you've done this, before you walk out of the house, what are your next steps? First and foremost, get a client statement for every account that you're going to review. And you don't want them to email it to you. You want them to hand you the original, if at all possible. Now, there's a reason for this. Why do we want an original? It's because it guarantees that you get to go back and give it back to them and get back into the house. If they email it to you, which will happen for a lot of us that are using virtual appointments, but if you're still doing some in-home appointments, you want that original statement because it guarantees that I'm going to get back into Tracy's house. Now, I could ask Tracy, for example, and I'm just borrowing the name Tracy, that's all I'm doing. I could ask Tracy to make me a copy, or I can ask for the original so I guarantee that I'm getting back in the house. I want that original for that guarantee. I can make my own copy for compliance purposes when I get back to my office. I can mark up my copy as I'm figuring out what we're going to do. When I get back to Tracy's home, I walk in the door. The first thing I do is I slide his statement back to him so I can put him at ease. He knows he can trust me to give him back original documents. That's another check mark. That's another win. That's building value and trust, which we want. Now I can start talking with Tracy in the follow-up appointment about what we talked about, how we got to that point, show illustrations, and try to move it forward. But as you're getting that client statement, you want to set that follow-up appointment. Cardinal rule, never walk out of a house, never shut down a virtual appointment without setting up your follow-up. Experience shows me 75% of the time you'll never get the follow-up appointment. Get the client statement. Ask your client to go get the statement. While they're getting the statement, tell them you're going to open up your calendar so you can set the time to come back. When they hand you the statement, set your follow-up appointment. Ask them to write it down or have a piece of paper that you can write it down and give to them to put on the refrigerator. But make sure when you collect the statement that you set the follow-up appointment. These are all ways to solidify everything that you're doing. And I know there's some questions and things in the chat room. We'll cover them at the end. The next thing you're going to do, if you're looking for assistance and you're looking for training, is email them over to me. david.allen@impactlegacygroup.com. What we're going to do when we receive that is we're now going to send you a data collection form. And over the next few days, this is going to be upgraded that when you are ready to email, you're actually going to be able to go to a back office page, fill out the data collection form, upload the statement, and it's going to come right to us. Okay. We're actually going to do the research and do the product selection for you. We're going to send you back these illustrations and discuss them with you so you have all the information you need. This includes talking about how to walk through the specific points. When I go back for my follow-up and show an illustration, the most important thing that I do is I spend a quick 5 minutes on the front end on the follow-up, on the close, talking about the differences again, like we just did. I go over those 5 or 6 points again. Then when I pull out that illustration, I show them the answer to every one of those points in the illustration. The reason that's done is it validated everything you talked about at the prior appointment. We talked about no risk versus risk. So I'm going to show them on the illustration where company ABC says you will not lose money. I show them what they're paying in fees, and then I show them what they will pay in fees and how much less that is on the illustration. I will even go so far as to calculate out, based upon what we're talking about for transfer amounts, how much they're going to save. So Tracy, you've got $500,000. I've been able to determine that you're spending 5.18% in fees, which means you're spending about $25,900 in fees. This product that I'm going to show you from Allianz has a capped fee at 0.75%, which means your fee is only going to be $3,750. So that $21,000 that you're saving, you now get to grow, and it gets to be part of your retirement package down the road. Sound pretty good? Make you feel better? You might be able to save over $20,000 in fees. You're going to get a yes answer. So I'm right back into soft closing mode again. But you also have options for yourself. You've got a choice. You can close on your own, or you can have us assist. I'm okay either way. I just want to build something here that allows agents to be able to go out there and have success that they want to have. Okay, so we're rolling all of this out. We've got a lot of agents that are calling saying, can I get some help? I want to learn. Jason, I've known for a while. I've helped him with annuities before Impact. We're going to be doing the same thing moving forward. Courtney Johnson, literally in the last 10 days, I think has made 9 appointments and we've closed 7 of them. Okay. It's a phenomenal thing what that's going to do for her cash flow. And now she's learning. And one of the things she's learning that I want to talk about now is when you think about the objections you're going to receive, they're not going to sound any different than a life appointment or a Medicare appointment. You're going to hear the same objections. I'd like to think about it. Can we circle back in a week and I'll give you an answer? I need to talk to my spouse, or I want to talk to my children. They help me make all those decisions. Or this sounds too good to be true. How could it possibly be that much better than what I already have? So this industry is very consistent in how people respond. So part of what we're going to do next week, and then I'm going to circle back, we're going to open up for some Q&A for about 10, 15 minutes, is we're going to go through what that looks like and how to knock off those objection answers before those objection comments before they even come to the table. So if you can eliminate the I have to think about it before they even think they have to think about it, it never comes up. And there's some very simple ways to do that. There's also very simple ways to determine how much money somebody wants to protect. This one I'm going to give you now. Let's say I'm working with Nikki again, and Nikki's got $500,000. Nikki, I know you don't really know how much you want to protect. I know things have been a little crazy. So let me ask you just a couple of questions. Let's identify what you're willing to lose. If you lost 10% of the balance in that account, $50,000 more was lost in your 401k and it never rebounded. You got $450 left and that's it. It's never going to get any better. Can you stomach that, or is that a little too much heartburn? Most people, when they hear that number, they're going to say, I'm not willing to lose 50,000. Perfect. Are you willing to lose 25,000 or 5% of your balance? If you lost 25,000, you have 475 left and it never rebounds. Can you sort of stomach the 25,000? Let's just assume Nikki said, you know what, I get it. I can lose 25. And if it never came back, I think I can live with that. Perfect. So Nikki, what you're telling me is you're willing to lose 25,000. What you're also telling me is you're not willing to lose any of the other 475,000. Is that correct? She's going to say yes. Here's where you guarantee some cooperation. Nikki, what I'm going to do is I'm going to look at options to protect the 475,000 that you're not willing to lose. And that's what we're going to look at next week. Does that sound fair? I'm going to get a yes. Now I'm going to ask her to go grab her statements. I'm going to pull out my calendar and we go through the rest of that. Okay. So that's a simple way to get them to acknowledge both what they're willing to lose and what they're not willing to lose. Our job is to focus on what they're not willing to lose. You could also say something like, if you like that, you get to leave the 25,000 with your current advisor. It can go up, it can go down, but now you've limited the loss to 25, which is all you're willing to lose. The other 475 will find a good secure place for you so that when you need to turn that income on later, we're able to do that. Does that sound fair? She's going to agree. Okay, so there's one little tip you actually could use now. On that note, I'm just going to put this on the screen. I'm going to go to the chat room. Let's see what some questions are here. And then we'll open it up for everybody else. So Melissa has a terrible signal. Yes, this is going to be in the back office. It is being recorded. Chris has already identified that. Tie downs. I like the phrase, Michael. What places do you experience the majority of your objections? Great question, Mike. The answer on that very simply is when you ask for statements. 90% of my questions come or did come right when I was done and asking for statements and trying to set up the follow-up appointment, because I didn't do a good job of eliminating those questions up front.
David, can I kind of circle on that as well? As do you feel that it's a trust issue or a product issue or both at that point?
It's honestly, it's a trust first, because one of the objections you're going to get is I've already got a guy there with my, that's my Fidelity guy, right? I've got a guy at Edward Jones or whatever other company is out there. You're going to get that first and foremost. And I have objection killers for that. And you have to be able to understand how to walk through that. We're going to cover those. The entire training next week is going to be how to walk through objections. Okay. Jason, do you treat FIA one-leggers just like insurance? 100%. I had one of those with Courtney last week. And unfortunately, I blew it because I allowed the spouse to give the impression that the husband didn't have anything to do with it. Completely my mistake. But at the end of the game, what happened there was the husband's grandmother is a retired Edward Jones person. So at the end of the day, if I can't get the grandmother on the phone, this one's not going to go anywhere. So we've already talked about that. The other thing that happens is, yes, we will definitely reschedule and make sure they're both there. And we will talk about the importance of both of them getting the information from me, the licensed expert, so that they have the information to make a decision. And this is where I'll actually go into one of my phrases that I use in every home. Jason, my job is to educate you. Your job is to take that education and decide what the best answer is for you and your family. Does that make sense? So I'm setting myself up as the professor in the room, not just some guy trying to make a sale. Are we obviously trying to move some product and make some money? Of course we are. But you don't want commission breath. You don't want to think about that. You do want yourself to be in a position to let your clients know, I'm simply here to give you education and help you to make a decision that's good for your family. Does that make sense? Is that fair? You want them to agree. Is that fair is one of my favorite 3 words to put together in every appointment, because now when they come back and want to give me an objection, you already told me 30 minutes ago that you felt I was being fair. So why would you not be fair with me now and make a decision if I've checked off all your boxes? It gives you that permission to be a little more bolder in the home. Okay. Amanda, what is low end dollar amount that would be appropriate for annuity? Great question. Depends on the circumstance for each individual client. I'm actually going to be writing an annuity on an 18-year-old on Saturday who's going to save $300 a month for the next 42 years. The projections tell us he's going to live on $10,000 a month starting at age 60 for the rest of his life, with an accumulated balance at almost $2 million. So we have places to go where you can start for as little as $100 a month. We have places to go where you can just transfer money in and allow it to grow. Just depends on what the client needs. So some people will ask me, which product do I think is the best? My answer is very simple. Whichever product actually answers the question for the client. So would I pitch the same product and the same carrier to Jason that I would to Tracy or to Chris or to Nikki or anybody else? Maybe, maybe not. My answer is, look, guys, I've got 75 or 100 different options I can use. I don't care which option I use. I do care that the option that I show you when I come back is the best possible fit, in my opinion, for what you need. Is that fair? And I get them to buy into the concept that I'm trying to be fair with them. And then you move it forward. A shout out Michael Hansen. This is a great thing. We'll talk about this right now. I was shocked to see what percentage gain it took to recover a significant loss. Enter the FIA with zero risk of loss. This is great. So let's take $100,000. If the market goes down 20%, your 100,000 drops down to 80,000. With an FIA, it drops down to, oh, it didn't drop. You're going to stay at $100,000. Now what happens on the recovery? What do you have to make on your $80,000 to get back to 100? You got to make 25% now on your money, not just 20%. You lost 20, but now the market's got to work even harder and be even bigger for you to come back. So that 80,000's got to make 25% growth to get back to 100. Where the FIA, if it makes 25%, you're up to 125. So Tracy, if your account just comes back to 100 or doesn't lose and now grows to 125, which one makes you feel better? The 125, right? I give them the answer. I just wanted to say yes. Now I'm going to go in and explain that his opportunity loss is actually 45%. Because you lost 20% where you're at, and you didn't earn actually the 25% on the rebound. That just brought your losses back. So that 20% drop costs you 45%. Or you could not have that at all and simply make 25%, you're way ahead. Which one feels better, not losing and making 25%, or having to go through a 45% swing to get where you want to go? It's an easy answer because you're presenting it the way you want. We're going to go over that in more detail next week. Do I like Social Security and annuity seminars? I think they're fantastic. I think any opportunity to speak to people and talk about how we can benefit them is an absolute win. Crystal, what's a good contact number for you? I do have a friend that wants me to find the best avenue for his money. Okay. In the chat room right now.
I already dropped that for you, David. It's already there.
You already did? All righty then. I'm not going to put it in twice. Actually, I'm going to do that, Chris.
I do want to say something in regards to this. Team, just so you know, we are trying to streamline our communications. That is why Slack is so vital to this organization. So if this is how simple it is, if you have Slack on your phone, David is a part of the Slack community. You can literally drop him an instant message inside of Slack while you're in a sit, or on the advanced markets channel, you can post the specific question and somebody who has some expertise will answer. But if you need to reach out to him, boom. Now he's going to give you his contact number, but I want to make sure that, well, even if you have that you're connected in Slack, so you're part of the community and it's simple while you're in the phone or while you're in the home.
Thank you for that, Chris. Jason Craig, how do you introduce your areas of expertise at the top of an insurance appointment so they know you do this when it comes up later? If you think about what we did at the prior company, It's exactly what we're doing. We're here to take care of this issue. That's why we set this appointment. So you've got a mortgage you want to protect. But our company is all encompassing. We take care of all kinds of things. So if you have final expenses, maybe you've got a mother or grandmother that needs some additional coverage to make sure that she or he is not leaving a burden on you, we take care of that. We have a whole department that specializes in asset protection and making sure that when you decide to stop working, otherwise known as retirement, we have people to help make sure your money is going to be protected. So it's going to be there on your terms and not regulated so much like it is by the markets right now. In my case, that happens to be my specialty. I've been doing that for a very long time, but I love doing the insurance also because I like meeting new people. So let's get into this appointment. Let's figure out how we can help. And I segue right back into let's take care of that lead. Okay. Let's see here. Love the explanation of recovery. You're very welcome, Daniel. Adam, so what sorts of policies and things should we be looking for to have an opportunity to present? That's a great question. We're going to unpack that a lot next week, but we'll give you some tips right now. When you're collecting information for any life insurance appointment, one of the things that we ask on a life insurance app or that a carrier asks is, what's your total net worth? Well, what do you need to have in order to get net worth? You need to know what their assets are. Everybody's got an asset called a retirement account. So Chris, I'm just going to collect some information so we make sure that we're quoting the right thing when we're looking at protecting your mortgage. Do you have like an IRA or a 401k, or your spouse have one of those types of accounts? And I look for an answer. Chris is going to say, yes. Which one do you have? I have an IRA. Perfect. I just write it down. I might continue to look down at my data collection sheet so that Chris just knows at that point in time, I'm simply collecting my information to be able to quote him on mortgage insurance. Now, back later, when you circle back, now you've got the information. Great, Chris. So you've got an IRA. How much have you saved? I've got $70,000. I'm just picking a number. I write down the 70,000. Is that with a securities firm or a brokerage house like a Merrill Lynch or T. Rowe Price? Yes. I don't need to know which one it is. I'll get that when I get the statement. But I do want to know that it's with a brokerage firm because it's going to come back here under the risk of loss discussion when you circle back. But all Chris knows, or the client knows at that point in time, is I'm collecting information so I can best quote what you're asking me to do right now. But you're also gathering that information to be able to circle back and talk about it later. Okay. Mike Hansen, final expense in Medicare gold mines have found monies. Yes, they are. Do we have a new data collection form? Great question, Steve. We have a data input form for sending statements to us. I still need to work with the likes of Chris and Dallas and the guys over there to see what the forms are that you guys are using. Because I literally hit the ground running here and I've been helping a lot of clients and run a lot of annuities. So I don't know what that form looks like, but I'm also going to make some suggestions on improvements if I see it's necessary. If not, we can talk about that next week. We'll actually have some forms and we'll post up and we'll go through those as well. So we make sure people are very comfortable collecting information and very comfortable eliminating objections before they come up, but also turning around and giving themselves the ability to tackle those objections if something comes up that they did not eliminate. Okay. On that note, let's open it up to anybody who might want to ask a question live. More than happy to take them. That'd be fantastic. If you got one, just unmute yourself and ask away. Nobody has a question.
Hey, David.
Yes, ma'am.
Let me turn my video on. It's Carolyn Salta. There I am. Oh, hello.
Hi,
there
Carolyn.
I am. Hi. I need to speak with you, but I just noticed very late in the game that this Zoom was happening. So I logged in really just a few minutes ago. So if it's okay with you, I'd like to give you a call. I have some annuities I need to write and have never done that before. Okay, you'll be hearing from me. Thank you.
No problem. That's what we're here to do. Happy to help. Anybody else with a question or a comment or something they want to find out a quick little how-to on?
Hey, David, this is Brad Frock. I believe one of the earlier meetings you had suggested a book. I believe it was Simple Retirement or something of that nature. I have documented that. Do you have any other books that you would advise, for somebody just now getting started, no knowledge of annuities?
Honestly, not really. Self-help books are great, in my opinion. Everybody's free to like them, love them, hate them, whatever their choice is. That's okay with me. You're not going to hurt my feeling if you think differently about somebody. But annuities conceptually, what we do, it's all about hitting the ground, finding a statement, and then learning how to work with those. Okay. So when you grab a statement, Brad, and you email it into the team and we start working with you, that's when your $1 million training starts. That's when things become relative, because the difference is you can read a bunch of stuff in a book, but if you've got a statement and you're seeing the client's statement or your own statement, for example, and you get to go through that in real life and see and hear and feel that impact, your learning curve is straight up. Okay. I've been in homes where when I've collected statements and then gone back and explained how we can protect their money, where I've seen people literally hug me and cry on the shoulder because they've been looking for someone for 2 or 3 years. And they can't believe somebody was able to go in there and just break it down into English where they can understand it. Because ultimately that's our job. If you've lost trust in the home, you didn't break it down where they understand it.
Right.
Okay. But if I've done my job and I've turned it into English, or if I've got to find my son who's got 5 years of French because I need an interpreter, or somebody that speaks Spanish or Italian or whatever other language is out there, I want the interpreter because my job is to get the interpreter to break it down for you so you can make that decision. I'm totally cool with that. But firsthand allows you to learn faster. The encouragement for the people that have not had a lot of experience here is write 5 or 6 annuities with me or somebody from my team to get that on-hand experience before you try to do it by yourself. It's going to do 2 things for you. Number one, your learning curve is 100%. Number 2, your interaction with the carrier on submission of applications is a lot more positive, because you don't have a carrier going, the suitability pages here makes 0 sense, and send you back 2 pages of questions. Because ultimately when that happens, we got to go find another carrier. It's much easier than trying to fix it. So learning how to do an app basically 90% accurate the first time out is a lot better than 50% and having to go back to the well 5 times. So if you want to read some self-help books to get some mental things, that's great. What I found is FIA training is a lot more solid on hand with somebody that can actually teach you all the important things, because a lot of it is just pivoting and building that trust. So you got to be able to do that from day one. That's a great question, Brad.
All right. Thank you.
Absolutely.
David, I have a quick question. I know in this industry with annuities, there are some states that do have some limits as far as what you can provide, New York being one of them, because a lot of the people that I would likely speak to would be New York in regard to this. Do you have providers that would service New York, or is that something that would be a difficulty?
We do have some providers. I would have to get with Brian actually to vet that out and figure out exactly who they are, because a lot of the mainstream that you use for the other 49 states either don't write in New York, or they have a sister company that only focuses on New York. So that'd be something to take offline and kind of get into, because I don't honestly have an answer on that right now, but it's something we can get.
Okay.
Okay.
Thank you.
The other thing on that, you're welcome, Tracy, is the application process can be different by carrier, although conceptually it's the same information, and it can be different by state. For example, Florida probably is one of the most strict applications you'll ever write, because you've got a lot of senior citizens in Florida and they're really wanting to make sure that they're protected appropriately. So there's ways to make sure that you do that. And there's things that we look at. There's 3 or 4 key points that we want to make sure that we tackle when we're looking at how to put together an application properly. Couple more questions. Jason Craig, recommended brochures to keep in your bag. You know what, whatever you like to represent, you can put in your bag. My opinion, since I write with so many different carriers, I don't have a bag big enough for all the brochures. So what I normally do is I do not leave a brochure until I've actually submitted an application. But then now that I've got an email address, I will email the brochure that night. So Chris, I'm glad we got the application put in. I want to send you a brochure. Your email's on the app. Is it okay if I send you the brochure so that you got the stuff to remind you of what we talked about today? I'm going to get a yes answer. He's going to give me the wave of the cap, and that's as good for me too, right? So I like to do it after the fact, because as soon as you put something down on the table, you've lost their attention. Okay. So you want to make sure you always are the person that has the attention. That's really important to us. Okay. One more question here.
I have a quick question.
Yes.
Is there, for people who have employer sponsored retirement, is there a threshold with like their 401k or anything like that? I'm assuming they have to be retired. And then is there a certain threshold where they can take advantage of it without major penalties?
Great question, Tim. The answer is really one number, 59.5. If you're employed and you're over 59.5, generally speaking, we can move the money out of the 401k or corporate retirement account into a private FIA type of vehicle. If they're under 59.5, unless the business closes or they're no longer employed there, we can't touch it. It's literally that simple. The magic number is 59.5. If you're over, we can move it. If you're under and you're still working there, we can't touch it. And I actually had with Courtney, we had an appointment where we were looking at 3 different accounts, and one of them was her existing 401k, but she still works there. Unfortunately, that account had the largest balance of the 3 we were looking at, but we can't do anything about it. So we made the client feel really good about the 2 other accounts and very simply said, in 7 years, we can come take care of this. But let's make sure that your investment choices in your 401k are protecting you right now. Let's kind of look at some things, and all you can do is tell them, this is what you have, this is what it's doing. You might want to talk to your advisor and ask these types of questions and create that value added so that when you come back in 4, 5, 6 years, you can actually do that. Okay. I know we're getting really close to our 1 hour, Chris, so I want to be respectful of that.
David, I have a quick question.
Yes.
So if you, you just need statements, my mom there's about $500,000. She's not sure if it's in the best spot it should be. So you just need statements from her.
Yep.
Like,
And then once I
okay.
get that, we'll give you our data collection form so that we can get a couple other pieces of things that is important to assist us in the design of the illustration.
Okay.
And then we're able to go out to the open market and figure out what carrier is the best fit, what products the best fit, look at 2 or 3 options that we might want to bring to the table, and then be able to sit down with you, Nikki, and help your mom out.
Okay.
Or
Perfect.
any other
Thank
client
you.
you got. Absolutely.
Okay. Fabulous.
Perfect.
You,
All right, so
as we wrap up, I do want to give a chance for a little engagement for the idea of ownership. Like, I think at times, when you walk in a store, like even when you're buying a new phone and you're looking at the phone, there's a reason why they put it on there so you can take it up and play with it and tinker with it a little bit. And I think it helps to verbalize some things. So I have a couple questions here. Okay. First, dude, phenomenal job. Excellent work. Thank you so much, man. I mean, I can even have chills saying that. Okay. But the first thing is I want to ask everybody, for you, what were your thoughts pre this conversation? What were your thoughts about annuities before you got into today? And what are they now? Before and now, after this first initial conversation. I would love
why don't we post all those answers into the chat so you
Yeah.
can just kind of read them out loud, Chris?
Yeah, that's great. Yep. And I know I've got wheels turning, but in this engagement, it allows you to take ownership of this. Chris is pumped. Love it. Comfort and capable, positive hope, complicated, now simplified, support, exclamation point.
Yes.
Cool. I didn't even consider annuities before.
Yeah, Erica, I mean, if you heard it, lots of agents, they come after a period of time in the industry and they look at somebody that knows how to do annuities. And they're like, oh my God, I've met with people. And if I look at all the people I didn't ask these types of questions to, I've walked away from millions and millions of dollars of annuities I could have protected, which means I've taken all of that commission and it went to somebody else.
Bingo. And these are the ones I'm paying attention to. And I appreciate your vulnerability in this. I didn't even consider before. Game changer. This is the one. Before, what is this beast? This is Kalia. What is the beast? But I want to learn more and figure it out. So now it may not be so simplified, but now you're just starting to see like a form there, and now you know it may be a little more approachable. You can still continue that conversation if you have any more questions after this. I don't want you to back away. That's the important part. Back away from the beast, right? Some other folks confusing, curious now. Embrace that curiosity and pursue it. If you have more questions, connect with David. Fear of the unknown when entering the conversation, now simplified steps to the process. So much insight, very appreciated. I've got a team that can help. Boom, absolutely. Where's the recording going to be at? This will go, we have where you're getting your Life Insurance Academy connections. You can connect with Sean and Slack, and he will, this is going to be edited, but that will be added to it once it's edited. Okay. I feel confident enough to now at least bring it up. That's the important part. If you're are you confident enough to start the conversation? Are you that confident? Great. Thankful this team is system, additional stream of income. This is exciting. It seemed like such a complicated subject. There's a lot here. Hesitant, but more confident. Great. Lean into that. Thrilled from Jason Craig. Let's ask this. How many of you are confident enough to start the conversation? Raise your hand. Okay. How many of you are still hesitant? Okay. Thank you. I appreciate that. I appreciate it. It's good to know. We want to continue to give you more exposure to this. Okay. So we will continue these on a weekly basis. Dave, do you want to speak to that?
Yeah, absolutely. We're going to move the time back up to its normal scheduled slot though, right? Next week, right?
Yeah.
Yeah, we had a slight transference, if you will, of making sure a bunch of schedules met for this time today with the people that had to get to lots of other places. I'll get to you in 1 second, Carolyn. And we're going to go back to our normal scheduled time, which is 9:30 Eastern. I think we were setting. Was that right, Chris?
Yes. Yep. And then to 9:30 Eastern. That's what we did today. Is that correct?
That's what we did today. So we were going to 10.
10 o'clock.
Yeah, 10 o'clock Eastern time starting next Tuesday. Same place, same login, the whole 9 yards. And the goal on this is to help you to build your repertoire with little slivers every single week so that you become more and more comfortable with this entire process.
Yeah.
Okay. And one of the things that's exciting about this is through Slack or through, if you go direct to me, you might be in a home and currently not comfortable enough to really walk through trying to get statements. Reach out to somebody who's done these. Reach out to me, reach out to Chris, reach out to Jason, reach out to anybody and say, hey, I'm in a home. I've done this type of an appointment, but they do have some money in an old 401k that I think we might want to look at to see if we can help them. Could I put you on speakerphone and have you talk to my client for a couple of minutes and explain what our possibilities might be? If I'm available, my answer is always going to be yes. You put me on speakerphone, you introduce me to your client. I'll talk about the possibilities and I'll work for the next 5 or 7 minutes to get that client to give you those statements and set a follow-up appointment. What you have guaranteed right there is I'm the one that helped you get the statement. I'm the one that's going to help you close that if you need that help, because now they've already know who I am. So there's that little bit of familiarity. So we're going to talk about what that looks like also. That's one of the objections that we are able to overcome. Next week's going to be a massive training on objections.
Oh,
And yeah, exactly. And if you're not writing a ton of notes next week, you probably shouldn't be doing annuities. Just saying.
Very cool. Thank you so much. Nancy, I don't want to miss you. I think you have your hand up. Is that right?
I know Carolyn did.
Yeah, I
Okay.
did. Okay,
Okay.
so I'm a little bit confused. Can you tell me what time? So you're going to do this every Tuesday for a while?
Every Tuesday for a long while, 10
A long
o'clock
while.
Eastern. Yep,
Okay.
10 o'clock Eastern.
10 o'clock Eastern, so 9 o'clock in Central Time.
Yes, ma'am.
Okay, that's what I've got it. And I come here to the secure,
Well,
Yeah,
Impact
Facebook.
Legacy, yep, impactlegacygroup.com/retire training.
Yep.
That'll
you
be the
please-
link.
can you please put that in the chat?
Yep, I got it.
It's in the chat right now.
Okay, thank you.
All right.
Jason, I like that question, and it absolutely will be there next week.
Okay, there you go. There's the link. impactlegacygroup.com/retire training. And that is 10 o'clock Eastern, 9 a.m. Central next week. Nancy said she's good. Okay, gang, I think that's a wrap. Thank you so much, David. Hey, give David a hand, man. Give him a hand. Like, absolutely crushed it. Super excited. I can't wait to see agent profitability go up. Like the things we've talked about are simple, empowering, and profitable. I think this checks all those boxes, and we're going to see some amazing things. I do want to encourage you guys, if you have time, to jump on that 3 o'clock training to connect with Advisors Excel. I think you're going to be blown away by the tools and resources that they're offering us as an organization. And this is just the beginning of all of this. It just, again, it gives me chills just to even consider that. So do not miss that 3 o'clock time. It is the same link. It may say something about the times because we're using a scheduled link, but we didn't want to mix anybody up. So just go ahead and hop on there at 3 o'clock and we will connect with you guys then. Thank you so much, David. We appreciate it.
My pleasure. Thank you, Chris.
Guys, have a great day.
These games.